Session 2. From ASEAN, we move to understanding PGMs. Our next session, Session 2, is titled The Roadmap to Advance PGM Market in Asia-Pacific Region. This session is curated by World Platinum Investment Council. And in a while, they will join us on stage. Our moderator will be Miss Grace Lin, Manager, Asia ex-Japan, Product Partnerships World Platinum Investment Council. Ms. Grace Lin works with key market participants across Asia to develop platinum investment products and partnerships. She focuses on expanding the role of platinum in regional portfolios and strengthening market access for investors. And we also have our panel members who are joining Ms. Grace Lin. Firstly, we have Mr. Joseph Stefans, Group Head of Trading, MKS PAMP. Mr. Joseph Stefans oversees global trading activities at MKS PAMP, or one of the leading integrated precious metals groups. He brings extensive experience in liquidity provision, risk management, and price discovery across the PGM complex and wider precious metals markets. Next, we have Mr. Kenny Hu, CFA, Head of Precious Metals Strategy, Citi. Mr. Kenny Hu leads Precious Metals Strategy at Citi, providing research and market views to institutional and corporate clients with a background in macro, as well as commodities and investment strategy. He focuses on the outlook for PGMs and a role in portfolios and hedging strategies. And finally, we have Mr. Weibin Deng, Regional Head of Asia Pacific, World Platinum Investment Council. Mr. Deng is responsible for WPIC's activities across Asia Pacific, working with investors, institutions, and market partners to grow awareness and adoption of platinum. His work centers on demand drivers, including industrial and automotive users, as well as investment opportunities in the region. So, ladies and gentlemen, can you please welcome panel 2 with a round of applause? Thank you. Hand over the time to Ms. Lin.
Thank you. So good morning, everyone, and welcome to today's panel discussion, the roadmap to advance PGMs market in APAC. It is fair to say that the PGMs market has given us plenty to talk about over the past year. After almost 10 years out of the spotlight, platinum has made a remarkable comeback last year, and over the last 12 months, we have seen platinum prices rebound strongly. While the market has pulled back somewhat from those recent highs this year, platinum continues to trade at level above those we see in period to 2025. So the obvious question is, where the PGMs market heading from here? What will gonna drive the next phase of demand growth, and how might Asia reshape the global PGMs landscape in the year ahead? So, to help us answer those questions, we are very fortunate to have 3 distinguished panelists join us today. Although I think they are all the familiar faces at the APPMC conference, please allow me to introduce them. So Joseph, the Head of Trading at MKS PAMP Group. Kenny, the Head of Precious Metal Strategy at Citi, and also we have Weibin, the Regional Head of Asia Pacific at the World Platinum Investment Council. Thank you for joining us today. So Joseph, I think I need to come to you first. It has been quite a ride for precious metal this year, with plenty of volatility along the way. And PGMs have certainly seen their share of it. So from what you are seeing in the market, how would you gonna describe current investor sentiment toward the PGMs? And also as we look ahead to the second half of the years, where do you see the most attractive opportunities emerging for investors?
Yeah, thank you. Firstly, thank you to the World Platinum Investment Council and the SBMA for allowing us to share our thoughts on this particular subject. I'd say the investment market is very much changed, and I think some of the speakers alluded to it earlier in terms of the barriers of entry to invest in things like PGMs have very much changed over the last 5 years, let alone 20. When you look at 20 years ago, the typical investor into platinum group metals were trading specialists, trading houses, and more kind of niche investor community, as opposed to today. Fast forward to today, and you look at the products that are being offered at scale in various countries across the globe, and it just allows a much broader participation into things like platinum group metals. So I think the incredible aspects around platinum group metals is they have kind of two main attractive points when it comes to investment. The first is what we all look at, and what I've looked at for 20 years, which is the fundamental side of things when you look at supply-demand forecasts, especially when you're talking about industrial consumption for things like platinum group metals. And the second, which I think has really emerged over the last 5 or 6 years, is the alternative investment to things like gold, which has been your traditional kind of investment product when you look at things like dollar debasement and diversifying away from fiat currency. So I do think, although sentiment has cooled over the last 3 or 4 months, I very much think we're in a trend where sentiment will continue. There will be continued allocation, especially from the investor side of the community, back into things like platinum group metals.
Thank you, Joseph. This really gives us a good sense of how the market is currently positioned and what investors should be paying attention to in the near term. So turning from positioning to the underlying picture, the next question is really about what is happening at the fundamental level of the market. So Kenny, let me bring you here. How do you assess the platinum market fundamental for this year, particularly in terms of the key drivers shaping the supply and the demand?
Thank you, Grace, and thank you all for having me. In terms of fundamental supply-demand balances, we're still modeling another year of physical deficit, roughly 300,000 ounces for this year. That would be the 4th consecutive year of physical deficit, albeit smaller than last year. In terms of supply, we're seeing overall about the same trend as last year. Total supply is still trending lower slightly, which is mainly driven by lower mine supply, and that is partially offset by continued growth in secondary output. On demand, I'll start with industrial. I think the auto catalyst structural downtrend is still continuing, but this year is more than offset by the strengthening or the rebound in the other industrial sectors. The top one is apparently glass, which saw a very weak, cyclical, very weak year last year and a sequential rebound this year. There's also some, I think, green shoots from the electrical sector, that is, AI data center linked. Still small in tonnage term, but the growth in percentage term is actually quite big in that sector. And PAMP sector apparently under pressure because of the supply chain disruptions linked to the Middle East. But net, we do see a small rebound in total industrial demand. For jewelry demand, I think the last year's strength, which was primarily driven by the China restocking, especially early in the year, I think that was more of a one-off, we're saying. And actually, even later last year, we already started seeing restocking turning to destocking, and that trend continuing to this year. And I think fundamentally that's because the wave of restocking didn't successfully convert into end-use consumer sales. On investment demand, I think that is actually the game changer, right? I think that's the game changer for the past 13 months. I'm sure you recall the multiple years before May of 2025 when platinum was trading range-bound, centered around roughly $1,000 per ounce. Back then, we used to spend a lot more time on analyzing, auto catalyst demand modeling, supply disruptions. These were the most important factors that we would use to explain a $50 or even $100 moving price, which back then were very big moves in prices, right? And then that picture completely shifted, and that is because of the very strong investment inflows, right? When after gold price hit all-time high of 3,500 after the Liberation Day in April, right? We start seeing catch-up trade emerging in silver, in PGMs, and that really started, I think, around the London Platinum Week of last year, last May. And then we saw how ETF flows, steadily came after the September FOMC, and of course the November listing of the GFX futures. I think that unlocked the Chinese investment demand, which was stuck for many, many years because there was not a proper, underlying instrument they could trade in, right? So we had all these strong demand, and even this year, when the price trend has turned, actually, it is still dominated by investment flows. If you look at the ETF net outflows this year, it's totaling about 500,000 ounces year to date, right? So that more than offset the annual physical deficit I was mentioning, right? We were modeling roughly 300K, right? So that tells you how important investment flow is. That is just overwhelming all the other, supply and demand drivers for now. And we do see that trend continuing for the second half of the year. And if we zoom in a little bit, if you look at the trading of platinum ever since the war started, right, between US and Iran, I think if you look at the 2-year real rates, US real rates, and platinum price, The negative correlation, average correlation, since the war started was about negative 0.8. And what is that number for the 3 to 4 year period before this? It was only negative 0.3. So it's telling you how trading, speculators, investors alike, they're driving this market. And the logic of trading, not just platinum, but the whole precious metal complex has been actually quite clear since the war broke out, is that whenever you have this escalation headline, right, people worrying about higher energy prices for longer, inflation being sticky, right, the market switching from pricing in fact cut into Fed rate hike, and that in turn leads to strong US dollar, higher real yields, and that all weigh on precious metal prices. And now I think the opposite is about to happen with the headline apparently coming overnight, right? Very likely a deal is going to be done. I think by this point, the re-escalation risk looks rather limited. And barring major re-escalation, I do think this year's bottom is behind us. I was actually on the road for the past couple of weeks. There was Citi investor conference, and I was in China seeing the traders, PMs alike. I think the trading community, they were quite hesitant in deploying capital into precious metal because of all the U-turns we have seen regarding US and Iran, right? They got burnt multiple times. They don't really have an edge trading the headlines, right? You are not the Revolutionary Guard. You're not the Trump administration. It's very hard to project what's happening next. That's why they've been largely kept on the sidelines. And investors, right, think about the retail investor who tend to chase the rally. There has been very weak momentum, and therefore they're not really chasing. But with this eventual de-escalation, if we see material de-escalation, the Strait of Hormuz opening again, right, oil prices lower, and that I think will mark the bottom for the precious metal complex. And later this year, again, I think investment demand will dominate, but it will be a rebound. I think we do forecast steadily higher platinum prices for the second half of the year.
Thank you, Kenny. But it is really just not only about the next few quarters. So if we look ahead, many people are asking about how platinum demand could evolve as industrial change and new technology gain traction. So Kenny, I need to stay for you for this one. So looking further ahead, how do you see platinum demand evolving across its traditional sectors, and what supply side risk we should pay attention to?
So on the traditional sectors, it's really a little bit lackluster. If we look at the auto catalyst demand, I'm sure that is still on a downtrend. Of course, there's counterbalancing factors, like, for example, you have more stringent emission standards coming online right later this year and next year, Europe, US, etc. You also have rising hybrid and fuel cell, albeit from a quite low base, kind of penetration that is helping total demand. But still, the much higher BEV penetration growth that's going to continue to weigh on auto catalyst demand. Another issue is the very wide price spread between platinum and palladium at the moment. Right, this year we're looking at 400 to 550 kind of range. Right, that is very wide, and it's not just auto catalysts. Right, I think beyond that, in many of the catalyst sectors, we're likely going to see more, I would say, reverse substitution right back into palladium because of the relative price advantage. On the other industrial sectors, like you mentioned, the traditional ones, I think many of them are hyper-cyclical, and therefore it's very hard to form a kind of like a consensus or like a trend. But I do think overall on the industrial, the traditional sectors, there's still continued headwind from this, electrification trend, as well as, in between the PGMs, the substitution trend. For jewelry demand, I think that is also facing a lot of challenges. Like I was saying, last year's strength was mainly driven by China. And I think in China, the jewelry demand is really facing two challenges. One of them is for the total jewelry demand. That's not just targeting platinum, but also gold. And the second one is the relative competitiveness of platinum versus gold, right? So on the first point, if you look at the demand data, right, this is true for both gold and platinum. We saw very big gain in bar and coin investment. And if you look at, for example, on TikTok, right, there are these channels educating the retail investors, and rightly so. They're saying, okay, bar and coins are way better forms of investment than jewelry, right? That's why you see people actually have been shifting from buying jewelry into buying coins. And that trend, I think, is likely going to continue if we do have this momentum rally later in the year, right, after the eventual a de-escalation and a straight reopening, then I think that's going to benefit investment demand more than jewelry demand. Now, the second point is the relative competitiveness in between these two precious metals. 20 years ago, when I actually grew up in China, right? Back then, if you wear a piece of yellow-colored jewelry, some people might think you're old-fashioned, I think it's tacky, right? People back then loved the white-colored jewelry, like white gold, platinum, etc. And 20 years ago, we were looking at annual China-only platinum jewelry demand of over 2 million ounces per year. And what was the number last year? It was, I think, slightly below 600K ounce. And that was even with that massive restocking. And this decade-long change of taste, I think it's a bit hard to reverse, right? It's a lot of reasons. There's the culture bit, the tradition bit, and there's also the long-term price outperformance of gold. And of course, there's a lack of, I think, new or great jewelry product design on the platinum side. And of course, a lack of marketing. Even with the big restocking last year, I would say none of the top tier, the largest big brand jewelry players were really involved, right? It was mainly driven by the smaller players. And of course, they lack that marketing power. So I do think this trend is a bit hard to overturn. So you still face a lot of headwind on the jewelry side. On the supply, I do think the long-term trend is supportive for platinum price. We can see this from the mine supply, right? Continued decline expected for the years to come. And of course, this is due to, of course, the structural reasons like ore grade going lower, and there's still a lack of investment, lack of capex, expansion, greenfield projects, right? If you look at what happened over the past years, right, the big miners really suffered, very poor margins, right, before the rally. And even with this price rally, you can see price volatility is still very high, right? We easily dropped $1,000 from the peak in January. And if you think about even for certain metals with more consensus, bull market view by the investors, such as gold and copper, it is very hard to see major new greenfield projects, even for these metals. And that's because there are a lot of things you need to consider, right? The capex, the political problems, ESG issues, dealing with local population, opening a mine, right? Shipping, logistics, all these issues. And above all, you might have some conviction on where price is heading next year or 2 years from now, but no one really has a view, taking a 10-year outlook, and because these new projects, right, they take as long as a decade or even longer to develop. And that's why I think it makes sense for these large PGM miners to stay cautious, right? And therefore, we're unlikely to see major ramp up in mine supply, and that structural decline in mine supply, which is partially offset by secondary output because of high prices, right? It's more attractive for people to scrap the metal, and also if you look at the kind of like the timeline of vehicle retirement, right? That's also helpful for secondary output. But still, overall, if we sum it up, total supply is still on a structural downtrend, and I do think that is some support for price if we do have a demand-driven rally, whether it's investment or maybe some other new industrial sectors.
Thank you, Kenny. So this really gives us a good picture of how the platinum and the demand dynamic were going to evolve over the longer term. But of course, supply and demand is only just part of the story. We are also seeing growing interest of new applications of PGMs. And we all know that China is the largest consumers of PGMs metal. So with its 15th five-year plan now on the way, this naturally brings us to you, Weibin. Artificial intelligence, data centers, and advanced manufacturing have become key priority under China's industrial policy agenda. So how do you see this development translating into future demand for PGMs over the next 5 years?
Thank you, Grace. I think in the China's 15 5-year plan, I think the artificial intelligence semiconductor have been escalated to a very high level. I think the country commit a huge investment in this sector, trying to promote productivity and try to push the economic growth. So I think very interestingly, about 6 or 5 months ago, our analysts have done a few studies in the China market, trying to identify what AI sector will consume PGM. So I think, for example, we have very exciting finding, and we also share our findings in the London Platinum Week in May. And like, for example, I think we can give a few examples in the AI demand. It's like, for example, when we know that in the AI sector, Right now, I think we need the crystal to transfer the signal using the optical connector for the signal transferring. So very few people knew that actually the crystal using in this optical interconnect actually are produced by PGM, particularly two. One is platinum, the other one is iridium. So this crystal actually grows in the platinum and the iridium crucible and supplying to the hardware for the optical interconnect. I think the number is not small. I think we believe that over the last 2 years, at least 260,000 ounces of platinum and iridium have been used in this particular sector. And also everybody look at the TV, look at the social media, and know that China is heavily pushing the development of the humanoid robot. So we know that in the humanoid robot, they need the silicon for the facial skin, for the covering, and also for some of the cushions. So I think this kind of silicon in the past, we saw that they're only used in the medical industry. But right now, we knew that they are all applied to the new energy vehicle and also in the humanoid robot for the skin and covering. I think in the 2025, we identified that at least 5 tons of platinum have been using in production in this silicon. And for this year, there's going to be a 20% growth to 6 tons alone for this particular sector. And also another example is in the data center. We knew that in the data center, hard disk is irreplaceable to store the data. And then at this moment, I think ruthenium and platinum have been quite heavily used in the hard disk. I think in the next few years, I think there might be another technology will change, switching the ruthenium back to platinum in a different technology. But this sector is also consume a lot of PGM. With the booming of the AI data center, we believe that ruthenium and the platinum will be heavily demand for this particular sector. And also finally, in the AI computing center, we also identified the electronic grade glass fiber have been heavily in demand, used in the communication, used in the semiconductor packaging, or using in the GPU packaging. So this kind of glass fiber, I think they have been consumed. I think the production for this kind of product require the alloy of platinum and palladium bushing. So I think this sector, we believe that at least 500,000 of platinum and rhodium have been used to producing this material for the AI center. So I think this is only a few examples. I think in the future, we can also see the embodied artificial intelligence, low altitude equipments, and also the brain computer interface. They're all using PGI as the key components in this device. So we believe that, I think, in the next 3 to 5 years, AI infrastructure building is going to consume more and more PGM, especially in platinum, rhodium, and also iridium and the ruthenium. Thank you.
Thank you, Weibin. So it is clear that China has significant potential to drive future growth in PGM demand. But as the physical market grows, so too does the need for effective risk management tool. So that's the reason why the launch of platinum and palladium futures contract on the Guangzhou Future Exchange at the end of last year gained a lot of attention. So Joseph, let me come back to you for this one. From your perspective as an international trader, how has this development influenced global liquidity and metal flow?
Yeah, it absolutely has impacted liquidity, especially from the main OTC marketplaces that we've relied on over the last 25, 30 years, like London and Zurich. But we're in a new geopolitical environment where there is going to be more fragmentation, and there's going to be more of a drive and need for jurisdictions and countries to establish their own price discovery mechanisms onshore. And that's what you've seen, obviously, with China. And I think you'll start to see it elsewhere around the globe. With a metal or metals like PGMs, which are deemed critical that drive will only continue to accelerate. And as my colleagues or my fellow panelists spoke about earlier, and going back to that investment piece, I think I can't emphasize this enough. It's quite eye-opening what we see. I think especially when you look at the precious metals complex, people have always been friendly to it in jurisdictions like China and jurisdictions like India. But what we're seeing elsewhere around the globe, especially in places like North America, and the drive for further allocation and exposure to these types of investment products like platinum, I think is very much the early signs of a growing trend that will only continue. And as people think in that light, there'll be, as I said, more and more jurisdictions that are going to look to establish price discovery mechanisms within their own countries or regions. So I think that will only continue. We've seen it in China. It will absolutely cause more liquidity squeezes and as things will start to normalize as exchanges become more mature. And you're already starting to see that with, obviously China has what sounds like they have a lot of metal now onshore, and that metal then can be used to back all of the contracts that are now trading on the GFEX.
Thank you, Joseph. So we have covered quite a lot to date, from market sentiment and the fundamentals to policy trend and future goals. So before we close, let's take a step back and look at the bigger pictures. Weibin, you have just returned from the London Platinum Week, which is one of the largest annual gathering of the PGMs industry. So what were the key takeaway from you? And how do you see the role of APAC evolving in the global PGMs market?
Yeah, so I think in the APAC market, we have two PGM trading contracts. One is in Japan, the other one is in Guangzhou. I think both have been contribute strong liquidity to the international market. I think for the APAC, I think in the PGM market, I think China and Japan are still the two dominant consumption countries for PGM. But I think for the rest of the country, I think they need to pay particular attention to the importance of these critical minerals, because I think the geopolitical tension going forward is going to significantly impacting the supply and the demand of the metal, and at the same time the price of the metal. So I think Asia country need to pay attention to how important the PGM have been to their industrial economy, especially in the electronics, in the automotive, and also in the glass, all these sectors. I think what we can do is that we still need to have liquid OTC markets in Asia. I hope the Asian Bank can play a more active role in the market making, providing the liquidity to the trader, to the end user, and also to the supplier. I think that is the market infrastructure we need to develop together over the next years. I believe that companies like MKS, they've been quite active in the Asia market and contributing to the liquidity. I think that's the good sign for the market development. But at the same time, I think, as I said, that from the government perspective, more friendly policy to encourage the trades for PGM complex, I think that is very, very important for the market development. I think the project line to initiate by SBMA, I hope in the future it will include PGM and then helping to develop the Asian PGM trading market. That's my view. Thank you.
Thank you, Weibin. I think that is a good place to lift the discussions. Let me just briefly wrap up. Today's discussion just highlights us how quickly the PGMs market is evolving and how many opportunities and questions lie ahead for the industry. What happens next remains to be seen, but one thing is clear. This is a market that will continue to give us plenty to talk about. Thank you all for joining us today. So please join me in giving our panelists a warm round of applause. And enjoy the rest of the conference. Thank you.
Thank you very much to Ms. Grace Lin for moderating, as well as to our three panelists, Mr. Joseph Stefans, Mr. Kenny Hu, and Mr. Weibin Deng. I'd like to invite all of you to please stand for a group photograph.